At first glance, nothing looks different. Markets are open. Screens are green and red like always. No emergency banners, no dramatic announcements. But that's exactly why this moment matters. Because the biggest economic shifts don't arrive with noise. They begin quietly, almost politely, when one key player stops behaving the way everyone expects. And right now, Japan just did that. In a way that's easy to miss, but hard to undo once it starts. Here's the part most people miss right away. Big economic shifts rarely start with chaos. They start with alignment. With systems quietly adjusting before the public realizes anything needs adjusting. Right now, Japan isn't panicking. It isn't scrambling. It's acting calmly. And that calm is exactly what should make you uneasy. On the surface, markets are doing what markets always do. Stocks move, bonds react, commentators argue about inflation, rates, and growth like nothing fundamental has changed. But underneath that noise, Japan ES position in the global system just shifted in a way that doesn't T-reverse easily. And once that kind of shift starts, it tends to pull everything else with it. But here's the part no one explains clearly. Japan doesn't need to break the system to change it. It just needs to stop playing one specific role the same way it always has. For decades, Japan has been a stabilizer, a buyer, a backstop, a predictable participant in global finance. When that predictability weakens, even slightly, the entire structure starts to feel different. This is where it gets disturbing. The global economy is built on assumptions that are rarely questioned. Assumptions about liquidity, about demand for debt, about who absorbs pressure when stress appears. Japan has quietly been one of those pressure absorbers, and now that role is changing. Publicly, the story sounds boring. Yield curves, currency dynamics, policy adjustments, technical language that feels abstract. But here's what actually matters. When a major economy signals that it can T keep absorbing imbalance the way it used to, the imbalance doesn't disappear, it migrates. And that's not even the worst part. The migration doesn't happen evenly. It concentrates. It finds the weakest points in the system. And those weak points are often far removed from where the original decision was made. Ask yourself this. If nothing important were happening, why does Japan's behavior suddenly require so much explanation? Why do analysts keep reassuring everyone that this is controlled, orderly, and expected? Those words don't get repeated unless someone is worried you'll notice the opposite. Here's a contradiction worth sitting with. Japan is acting deliberately, not desperately. That suggests foresight, not panic. But foresight implies anticipation. Anticipation of what? Of stress that hasn't fully surfaced yet? Of pressures that haven't shown up in headlines? That's the uncomfortable implication. This is where the idea that it has begun starts to make sense, not as a dramatic collapse, as a process, a slow rebalancing that doesn't announce itself until it's already well underway. The kind of shift where, by the time everyone agrees something changed, it's too late to pretend it didn't. But here's the part no one wants to say out loud. Global systems don't like losing anchors. They don't like uncertainty about who will step in when something breaks. Japan has been one of those anchors. Not the only one, but a critical one. When an anchor loosens, even slightly, everything else starts to drift. You might be thinking this sounds abstract, distant, academic. But the effects don't stay abstract for long. They show up in funding markets, in currency volatility, in how risk is priced when no one wants to be the last buyer standing. And those effects don't hit everyone at the same time. This is where it gets uncomfortable for everyday observers. The public sees stability because prices haven't exploded, because life looks normal, because the system hasn't seized up. But stability isn't the same thing as balance. Sometimes stability is just a pause before pressure releases elsewhere. Japan's move didn't create a crisis. It revealed one that was already forming, a quiet strain that had been building under the surface. And when that strain meets a change in behavior from a major player, the system has to adapt. Adaptation isn't smooth, it's uneven. It creates winners and losers long before anyone agrees on what's happening. Here's another unsettling fact. Global markets are deeply interconnected, but accountability is not. Decisions made in one place ripple outward without clear responsibility for the consequences. Japan knows this. It also knows it can't carry global risk indefinitely without consequences of its own. So when it adjusts, it does so carefully, quietly, but firmly. And that quiet firmness is the signal. Not a warning siren, a posture change, a subtle shift in how much strain it's willing to absorb. That kind of signal doesn't demand attention. It waits for attention to catch up. This is where it gets disturbing again. Most people only recognize economic shifts when they feel personal discomfort, when prices spike, when jobs vanish, when volatility becomes impossible to ignore. But by then, the structural changes have already locked in. The decisions that mattered were made earlier, in moments that felt technical and dull. Think about how often major changes are dismissed at first. It's temporary. It's manageable. It's already priced in. Those phrases appear right before markets discover they were wrong about the timeline. Japan's move fits that pattern too well to ignore. But here's the part. No one explains, honestly. Global systems don't adjust all at once, they adjust through stress points, through areas where assumptions were the weakest, where leverage was highest, where flexibility was lowest. That's where the consequences of a shift show up first. And silver, currencies, bonds, equities, they don't all respond the same way or at the same speed. Some lag, some overreact, some look calm until suddenly they don't. The market's reaction is rarely proportional in real time. It's delayed, then abrupt. Ask yourself this question. If Japan were confident that the system could handle business as usual, would it need to change anything at all? The answer is obvious. Stability doesn't require adjustment. Anticipated instability does. This doesn't mean collapse is imminent. That's the wrong way to think about it. What it means is that the era of effortless absorption is ending. Someone always pays when imbalances grow. Japan is signaling it won't always be that someone. And that's not even the worst part. The worst part is how little room there is for error once these shifts start compounding. Other players watch closely. They adapt too. They ask whether they should continue playing their old roles or start protecting themselves. That's how a single adjustment becomes a broader realignment. This is how global economic shifts actually happen. Not with explosions, with quiet coordination problems, with delays, with hesitation, with the slow realization that the old rules don't apply cleanly anymore. Public narratives will lag behind this reality. They always do. Officials will frame it as technical, as manageable, as part of a normal cycle. And maybe, individually, each explanation will sound reasonable. But together, they form a pattern that's hard to ignore if you're paying attention. Now here's where all the dots start connecting. Japan's move isn't about strength or weakness in isolation. It's about limits, about what happens when a system that relied on certain behaviors can no longer rely on them the same way. When predictability fades, risk has to be repriced. That repricing doesn't announce itself cleanly. It shows up as volatility where none was expected, as calm where action was assumed, as sudden sensitivity to things that used to be ignored. The market becomes jumpy, not because it's irrational, but because the reference points have shifted. So what does this actually mean for the market and for you watching it unfold? It means we're entering a phase where outcomes matter more than intentions, where small moves can have outsized effects, where the absence of panic doesn't equal the absence of risk. It means the next major adjustments won't come from obvious shocks, but from delayed consequences, from systems trying to rebalance after pretending nothing changed, from players discovering that the safety nets they assumed would always be there are thinner than expected. Japan didn't flip a switch that shut the world down. It adjusted a lever that the world depended on more than it realized, and once that lever moves, even slightly, everything connected to it has to recalibrate. This is why the phrase, "it has begun," matters. Not because something dramatic happened today, but because a process started that doesn't easily stop. A process where the global economy learns, again, that stability is conditional. When you look back on moments like this, they never seem important in real time. They feel technical, quiet, easy to ignore, until the consequences become obvious. Until people start asking when it all changed. Now you know where to look. You know what kind of signals actually matter, and you understand why calm can sometimes be more dangerous than chaos. Now you see what most people don't.